All right, everybody, hello and welcome. This is the second in a 5-part series that Ecotone partners are hosting. My name is Heidi Lenffer and I work as a research analyst with Ecotone partners. And part of my role is to organise this webinar series that you've joined today, which means I basically get to speak to brilliant women leaders in the field of impact, investment professionals who've built a career around investing in women and often putting skin in the game to do so. Before I go any further, I just want to acknowledge that I'm calling in from Darug country, which is in the beautiful Blue Mountains in New South Wales. So I want to pay respect to the Darug people, their elders past and present. I also want to extend that to any First Nations people joining our call today. So as I mentioned, this is the second in a 5-part series that we're organising in partnership with DFAT. The Department of Foreign Affairs and Trade have an interest in getting gender lens investing more on the radar of the private investment community in Australia because they've been doing heaps of great work in the Asia Pacific region supporting women-led businesses. So today we are focusing on the commercial case for investing in women. And coming after this, we've got a webinar looking at the macro lens of gender lens investing situated within the broader project of gender equity and how we need to be looking at the investment choices we're making within that wider lens of policy changes that will support women staying in the workplace and all aspects of their career. After that, we'll be looking at the intersection of gender and climate and how they're inextricably linked. And then the final webinar topic will be looking at 5 high impact gender and climate focused investment opportunities in the Asia Pacific region. So heaps of variety, and I hope you stay tuned for the whole thing. Today's event, we've got 4 excellent speakers and I'll introduce our moderator shortly, but just to give you an overview, we've got 1 hour to cover a lot of ground. So I will allow perhaps 5 minutes of time at the end for some questions, but if you do have any burning questions, please pop them in the chat and our moderator will get to them at the end. So to introduce Kat Dunn, our moderator today, she is a good friend of mine. She's the founder and CEO of Aviatrix, which is a consulting group that supports founders in the decentralized finance community. It helps them align their projects with UN sustainability goals. Kat started her career in banking and corporate law, then moved into the financial services sector as a listed fund manager for Perpetual Limited. She was actually the youngest member to join the senior executive team there. And at the height of that job, she decided it was time to realign her career in a more purpose-focused vision. So she quit that and became the CEO of Grameen Australia, which is a non-profit replicating the microfinance model of Grameen Bank, which you may recall won a Nobel Peace Prize for helping lift women out of poverty through small business loans through an excellent microfinance model. So after doing that, she's been pursuing impact investing more generally and has been working closely with the decentralized finance community, including leading an angel investing network in the Web 3.0 world, which I'm sure she'll tell you about. She's delivered her fair share of keynotes over the years, so we're in safe hands today. And on top of all of that, she's a pilot, which is a skill that she shares with another of our speakers today, which is a little bit ridiculous. Anyway, over to you, Kat.
Thank you so much, Heidi, and welcome everyone. It's wonderful to see you here today at this panel. I'm very much looking forward to speaking with our panelists. It is my pleasure to be moderating this panel of very accomplished women who are going to be sharing their experiences with you as investors and educators across business, finance, and politics across the globe, including Asia. Many of the people around the world hold the view that investing in women is predominantly a moral or social justice cause, but are less aware of the financial and commercial upsides of investing with a gender lens, not to mention the positive economic-wide benefits that accompany this paradigm shift. So as Heidi said, the purpose of today really is to illustrate that commercial case for gender lens investing and highlight the opportunities and risks of not paying attention to gender. To bring this to life, we'll learn from 3 active investors who are constructing their portfolios to leverage the performance advantage of gender lens investing. And we're going to learn about the opportunities in the Asia Pacific region. As we know, the gender pay gap is well documented. Women make about 80 cents on every dollar that a man earns. But what's less well known is the gender investment gap. Research shows us that women business owners pitch their ideas to investors for early stage capital. They receive significantly less than men. Only 2.3% of VC funding went to female founded businesses in 2021. And the pandemic exacerbated this with about a 27% decrease of venture funding going to women-led startups in 2020. And only about 12% of decision makers at VC firms are women, but yet businesses founded by women ultimately deliver higher performance and higher revenue, more than twice as much per dollar invested as their counterparts. According to Boston Consulting Group, for every dollar of funding, these startups generated 78 cents, while male-founded startups generated less than half that, just 31 cents. And startups founded and co-founded by women actually performed better over time, generating 10% more in cumulative revenue over a 5-year period. He started out by lending $27 to 42 women in Bangladesh and called this microfinance. The result was that they all repaid him in full. And this was the genesis of Grameen Bank, and to date, it's lent over $27 billion to over 10 million people in Bangladesh with recovery rates of 97%. It was so successful, it's been rolled out in over 56 countries, including the US, where to date, it has lent over $1.3 billion to over 130,000 women with recovery rates of over 99%. It has since been replicated in Australia. And in 2006, Professor Yunus and Grameen Bank jointly won the Nobel Peace Prize for their work in alleviating poverty through microfinance. The focus of Grameen was on financing the mother of the household. And Grameen Philippines showed that after 4 years, investment in children's education grew by 24% and business assets grew by 20%. And in Bangladesh, investing in women micro-entrepreneurs lifted over a quarter of the country out of poverty, an important economic-wide structural impact. Many of these women generated employment opportunities for those in their community, which had flow-on effects for those employees' families and the next generation's prospects for higher education and ultimately professional success. This is a commercial example, however, in the development context with debt investment. But what about equity investments? Well, that's what our panelists will be here to illustrate today. So please allow me to introduce them, starting with Ananya Sinha, who is a venture capital investor currently supporting Artesian's Female Leaders Fund, investing in high growth, female-led startups. Ananya is vice chair at the not-for-profit Women of Colour Australia and has previously founded a climate tech startup. She has also gone down the Web3 rabbit hole to establish her own NFT collection, Brown Baddies. And I recently found out that she met the co-founder of one of my NFT collections, Angel Alliance, Maddie Bergen. Just goes to show how tight-knit and small and quite collaborative this community is. So welcome, Ananya.
Thank you so much, Kat.
Welcome. Now we have Samar Mcheileh, who is the current co-CEO at Scale Investors after joining the business in early 2019. Samar has over 12 years of financial services experience, having worked across a range of executive roles at JB Weir. Samar has also worked in London for a hedge fund publication and started her career in logistics, exporting scrap metal to Southeast Asia. Samar's an active participant in the Australian early stage ecosystem and is part of the first 100 Women StartMate Fellowship in spring 2020. Welcome, Samar.
Pleasure to be here, Kat. Hi, everyone.
And our third panelist is Dr. Pamela Ryan. She is an investor, entrepreneur, author, psychologist, researcher, futurist, philanthropist, and like myself, an occasional pilot. She is the managing partner of the Everywhen Capital Group based in Austin, Texas, managing a portfolio of business partnerships, investments, and organizations intent on positive impact. Dr. Ryan has been an active investor in some 13 venture capital funds, the last 7 of which have been women-led, on 3 continents over 30 plus years, a path sparked while she earned her PhD at the University of Texas with her award-winning research on the psychology of decision-making in the US venture capital industry. Her latest book, Impact Imperative, Innovation, Entrepreneurship, and Investing to Transform the Future, provides insights from innovators around the world on how we might contribute to better futures for people and planet. Welcome, Dr. Pamela Ryan.
Thank you. Great to be here.
Great to have you all. This is actually quite exciting. I personally got into the investment space through my work as a corporate lawyer, starting out in structured capital markets and then moving to M&A, private equity and VC, and then moving in-house at a listed fund manager here in Australia. And I found that there were really exciting opportunities, especially in the impact investment space, particularly after I worked with Grameen Australia and saw the benefits of investing in women through debt finance. So to kick off our discussion, being that only 12% of decision makers at investment firms are women, can each of you tell us about your journey into the investment industry and why did it appeal to you? Samar, we'll start with you.
Hey, Kat. Yeah, great question. We spoke about this a bit earlier, and I think my quick answer is I wanted to make money, and it's quite appropriate for the topic of today about the commercial case. I was really quite creative as a kid in school. I did lots of art. I wanted to be a fashion designer, like to think I'm fairly stylish, sort of keep that as a side hobby. But, I knew I'm not going to make a lot of money. It's going to be really hard to crack that industry. And so I decided to get into logistics, as Kat mentioned earlier. That's kind of where I started my career, and then went over to London and decided that, being part of the hedge fund publication exposed me to the wonderful world of finance. And this was pre-global financial crisis. So I was like, in the money, like this is going to be an amazing career, and decided to go into it in March 2008 when I came back to Australia, which was, pretty tough. But it's been, a really fascinating journey, and that's kind of what I started in capital markets, and that's what really got me exposed to this area, and then really wanted to go up the risk curve, have impact, and actually support more women to be in this space, and this is kind of what's led me to where I am now.
That's so awesome. It's really exciting to see how the different and diverse starting points you might have from investing in finance. So you started off in fashion and then realized that there was a real opportunity there. I came from a family that was actually relatively poor. So a lot of my drivers were to be able to emancipate myself from that situation. So I think it's really fascinating to hear the diverse backgrounds that each of our panelists have. Ananya, how about you? How did you get into the investment industry?
Yeah, it's a really good question because I never thought I'd be working in finance ever, to be completely honest. I started as a founder. That was my first interaction with startups at all. And that's where I fell in love with tech, fell in love with startups. I think I graduated a few years ago, but there wasn't really such a big ecosystem back then. So that was my first interaction with it. I worked in strategy consulting for a few years, and I think like a lot of people, COVID just really made me rethink where I wanted to be, how I wanted to be like making impact in my career. And I think, I'm not sure if any of you have watched Hamilton, but I've always wanted to be in the room where it happened. And that's what VC is to me, like being at the forefront of innovation, making decisions at it, like being able to actually change, the opinions or impact because of, my different background. And so that's what led me to VC. Like I genuinely never thought it would be something I'd be doing, but working in this fund was just such a great intersection of everything I really love, to be honest. So that was my journey into investing, really.
I can super relate to that, Ananya. I actually did see Hamilton. I thought it was fantastic. And as a lawyer, you do often fantasize about being in those rooms where, you know, important decisions are being made and being able to make a contribution to, you know, the shape of society. So, and the finance certainly does have the opportunity to do that. We can see the massive economic structural shifts that, you know, deploying finance in the right ways can have, you know, a great impact, an intergenerational impact. So I very much relate to that. And Dr. Pamela, how about you? Did you have an organic foray into the investment industry, or was this something that, you know, was by design?
I'm probably a combination of Ananya and Samar. I started as a psychologist in South Australia for the Maya Group, and was told by my first boss that I was probably too socialist to be in a commercial environment, because I'd grown up in Broken Hill, very unionised city, but moved to Austin, Texas in the late 1980s to do a PhD at the University of Texas Business School, and happened into venture capital as a way, as Samar was saying, to make money. That was what funded my PhD, was to consult to, at that time, what was a very fledgling industry in Austin of venture capital firms. I think Austin Ventures was about the only venture capital firm at the time, with a tiny $28 million fund that grew to many billion over the 30 years that they were in existence. And so I was consulting to their portfolio companies and was in the right place at the right time, and decided to do my PhD on the decisions of venture capitalists. And also, because I was there, I was paid by some of my firms that I consulted to in stock. And so I was really fortunate to be an original investor in some of those companies that have become household names, certainly in the United States, which I should have mentioned. I'm coming to you from Tonkawa First Nation people's country of the Central Texas area near Austin, and I'm a dual citizen of Australia and the United States. So I've been commuting between the two for now over 30 years, and I've been a limited partner and involved in venture capital in some way or another since those first days, researching how venture capitalists here made decisions. And as you mentioned, Kat, I've now been a limited partner and often an advisor in about 14 venture capital funds. And so I've seen the gamut from the very male-dominated venture capital decision-making to all female decision-making. And the last 7 funds that we have invested in as part of the Everywhen Capital Group have been all women founders, starting with One Ventures in Sydney in Australia with Dr. Mcheileh and Anne-Marie Burkle. And the most recent one is Jennifer Buckley and SWEEF, the Southeast Asian Women's Empowerment Fund out of Singapore. So we've also invested in Rethink Impact, which is the largest US female venture capital firm based out of Washington, DC, Astia out of Silicon Valley, True Wealth Ventures and Textiles Impact in Austin. So we've seen a variety of women venture capitalists and a variety of female entrepreneurs they've invested in across the US and across Asia and Australia. And so what started out as a way to fund a PhD became in some ways the hum in the background of my career, which included, as you mentioned, at one point becoming a pilot and researching and writing books and doing all sorts of things that add to the investment process.
So I love your background, Dr. Pamela. What made me laugh a little in your background on how you got into investing was that you said, you know, people might have thought that you were socialist coming from that unionized area that you were in Broken Hill. And for those of you who well, you can check out my LinkedIn. I'm a humanitarian capitalist, and there's this myth that investing in social issues is really just a moral cause. But the reason that I think it's so powerful is actually, if you think about, if we are going to continue living in this, you know, increasingly growth-oriented world, then surely the opportunities that capital investors want to chase are the ones that have billions and billions of customers. And usually those problems to be solved that impact billions and billions of people are humanitarian problems. And you can do that in a way that actually is quite scalable. Solving those problems is quite scalable through business, because as we know, government funding isn't enough and charity funding can't be done at scale. So by doing it in the form of business, not only can you solve that problem, but also have the power to be able to fund your operations and increase your profits as well. And the research says that investing in women leads to increased performance. And, you know, each of you actually have skin in the game. What I'm really interested about, Pamela, is when you were doing your research into the psychology of US VC investors, what were some of the insights that really surprised you and wanted to make you delve deeper into how to take advantage of some of the best decisions they were making?
I think I'll start with more recent research that we embarked upon about 12 years ago. We partnered with our part of the Everywhen Capital Group includes the Tingari Silverton Foundation, and we partnered with the Institute for the Future in Palo Alto, California, around 2011, 2012, when we were getting to the 10-year mark with the Ernst & Young Entrepreneur of the Year Award. We initiated with them the Social Entrepreneur of the Year Award that started here in Austin, Texas in 2003. And so we were examining what we'd achieved with 10 years of the Social Entrepreneur of the Year Award, and we concluded not a whole lot. And it became basically a way for social entrepreneurs to just apply for another grant for service delivery, not necessarily entrepreneurship, systems changing, innovative, paradigm shifting kinds of ways to change the needle on the really big issues facing our planet and our humanity. And so we worked with the Institute for the Future to look at what the future of impact and entrepreneurship and innovation would look like. And that ended up becoming a 5-year project that resulted in the Impact Imperative book. And what was surprising at the time, that is not surprising to any of us in the 2020s, is how dramatically different the world would be in the 2020s and how very unprepared we were for it. We started as a result of our look into 2030 and what the chaos that would ensue both climate-wise and socially and economically across the planet. We started putting into practice investing for impact across our whole portfolio. So I manage 5 different funds, and one of the funds, the first one that we geared towards positive impact and doing no further harm, was the foundation because it had the least amount of tax consequences. And so we became our own research pilot in a way, and we staggered our foray into impact investing over several years, starting with the foundation fund and then introducing each of the other funds over the next few years. And we found by 2019, and so you might recall that year, the MSCI and Russell, other public indices showed that a lot of funds and stocks and bonds increased by about 12%. And so we found that our last fund off the rank matched the 12%. The foundation fund that was by then 100% impact portfolio was 19% return on investment. And when we started, we were really frustrated in the early 2010s with the fact that there was virtually no ESG data, no impact data for us to make our investment decisions on. So how are we going to screen companies in? It was easier to screen them out, but not so easy to screen them in. And so we, out of total frustration, said, let's use women and diversity, people with diversity in top management teams and in boards of directors as our proxy for positive impact. And little did we know at the time that we had stumbled on a really successful investment formula that by the late 2010s was shown in research across the world, in any market, in any industry, that investing in companies, organisations where women are part of the decision-making teams far outperform the teams where they're in the companies where it is totally men. And the more women who are involved in those decision-making teams, the better the performance. So we were a living example, and our own research that was mirrored in the wider society around why it was really good to invest in women.
And that's a really incredible stat, a 19% return on investment, Pamela. Samar, you know, with your angel networks in Australia, are you seeing similar results, or, you know, and what other market trends are you seeing emerging with gender lens investing?
Yeah, we've got a couple of really good examples. I mean, obviously investing at this early stage is super risky. General advice only, disclaimer. We have so we're a syndicate of investors. So we started in 2013, and it was very much a member-led syndicate option. So the members within the syndicate would lead transactions, whereas now we have a team, including myself, that kind of screen deals that then take those opportunities to investors, and then depending on their background, they'll opt in. We have a couple of really great examples. Trademark Vision was one in 2018 that we exited for 30 times return, which was incredible. Within 4 years, there was only one investment. The angel investors actually helped that Dr. Sandra Mao with the exit. So one of our investors was on the chair and helped kind of, you know, facilitate that transaction. We also had a drug pharmaceuticals company called Cognition Therapeutics list on the NASDAQ last year. So they're in clinical trials for, currently they're doing a Alzheimer's drug, which they're trialing, which is going really well. So we have those two really exceptional examples in a less than 9-year period, and 4 wind downs. But we've made 38 investments during that period of time, and ramped up quite a bit in the last few years. Obviously right now it's we'll see what happens, and, you know, people tend to kind of support their existing portfolio companies, which is certainly happening with us. I think the other really interesting trend, and one that we really want to focus on, which we've all kind of spoken about before, is intersectionality and the layers of disadvantage as it relates to women. It's one that we are really supportive of, and one that we think is really going to start to hopefully shift the dial, because we can't just create the white women's version of a male VC. We're going to come up against the same problems. We're not going to be actually solving the problem. So we're supporting a company called The Creative Collective that's run by Priyanka. They've got a grassroots program called Anyone Can, and those sorts of programs, which are like pre-accelerators, accelerator, incubator type programs that are really focused on women of color and Black women, run by women of color and Black women. I think we believe it's going to really try and, you know, it's going to start shifting things in a very different way, because collaboration is the key. And I think another fantastic example of that is the founders of Scale have always wanted to launch a female leaders fund in the Asia Pacific region. And we're so proud to partner with Artesian on a female leaders fund, which we launched late last year. And it's a series A and B. So we invest at pre-seed seed super early. And this is that next check, because we all know another issue is that kind of valley of death for women. That the numbers at angel investing in Australia is probably about 20% of angel money. But when we get to VC, it's like 4%. I think the US is obviously bigger market, but even worse stats. So, you know, that we think that this is a potential way to, you know, attack it from all angles, if you like, and create more opportunities and really find those untapped markets and you know, huge opportunities that are not even being seen in the space.
I really love you touching on collaboration and how that's a really important driver for success. I know that certainly with Grameen, when we started rolling out our programs around the world, it was quite successful in many of the South Asian communities, but one failure that we had was actually in Glasgow. And one of the learnings that we had there was in that predominantly white Western community, the attitude or cultural norm of that kind of community collaboration was not present. And so many of the mechanics that created a really strong form of the Grameen design weren't present in that particular version of our replication. And what we found in the Southeast Asian and Asian markets is because of the cultural norm of community and sharing, the social collateral model was much more successful, which is why we chose in Broadmeadows, Victoria, where, you know, you're in Melbourne. We chose to start there because it's got a high migrant population. Over 40% of the people there are born, you know, overseas. And so that quality of community is quite present. And when we talk about the women that we've invested into in Grameen, many of them are women of color. I mean, in America, there are Latino women and other women of color that are quite successful there. Can you talk about, for those that don't know about this word, intersectionality? You know, can you define intersectionality in terms of the gender lens approach and how, you know, important it is in your experience to be quite holistic when you're approaching diversity in that way?
Yeah, absolutely. So what we mean by that is, as I mentioned, so those statistics on women receiving VC money is simply just based on women, and they're typically white women. Whereas when you do this, so the Creative Collective did some research on Black women and women of color in Australia, and I think it's like not even 1%, 0.003% or something, and similar stats in the US as well. And there's, you know, there's some great examples that Pam mentioned earlier about women of color starting their own funds. Serena Williams has a great venture fund. I mean, there are really great examples, and it's exactly kind of what you say, Kat, where what we're seeing is they are a different, like, so you start with women, you're already disadvantaged. Then you add your woman of color. You have there's multiple layers of disadvantage. So your opportunity to succeed becomes even harder. And so if we're not, and you've just mentioned like the collaborative nature, women are inherently, it's a societal thing as well, right? Like in terms of being more competitive as opposed to collaborative. And we just want to, we're here on this panel today to show that when you collaborate, the opportunities that you can create and the outperformance is from collaboration. Because when you're investing at the super early stage, it's much more than capital that you need. I mean, you need capital, but you also need support and collaboration. And multi-layers of disadvantage only help by other people and other women building up and creating those pathways. And that's kind of how we look at it. And as I mentioned, and I think this is something that, you know, the Female Leaders Fund does, is you find untapped opportunities and a completely new market that hasn't even been explored yet. And there is, I think, some great examples. I can see Pam's taken herself off mute. She's probably going to add to this, but I think,
I was going to jump in there in a very capitalistic way and say that the disadvantage you talk about for women entrepreneurs, and particularly women of colour, is an extraordinary advantage for investors, because men are ignoring, the male investment community is ignoring that opportunity. So if 98% of venture capital goes to men, then all of those women starting businesses and growing businesses are an untapped market. And so that is a huge area of potential, and possibly one of the reasons why the women-led venture capital firms are doing so well, because they're getting a really huge deal flow of excellent women who have had to work so hard to grow their businesses and get to where they are.
And that's actually a really great example, because I think, you know, in those missed opportunities for some are opportunities for others. And to drill down into some detail about, you know, one of the practical opportunities in your portfolio, can you tell us a little bit more about Creative Cooperative? Why was that commercially a strong strategic decision?
I guess because they're starting at the grassroots, because I think one of the other things they found through their research is women of colour and Black women in Australia are not setting up their businesses for success from the beginning. And this is a lot of the work that we do at Scale in terms of educating women as well. It's never too early to learn. There's a lack of network and social capital within women in general. And that's what we saw with what Priyanka was doing. Like she's done so much in the last couple of years and managed to get some great government funding to help support her. So we're like, you know what, we want that pipeline, and we're going to start as early as possible and put our money where our mouth is and support those types of organizations.
I love that. And we've seen a little bit about how in the angel investing and VC community, there are these opportunities, and we talk about collaboration. Interestingly enough, I was involved in helping the impact framework of the Apostle People and Planet Diversified Fund, which has invested into the Artesian and Scale Collaborated Female Leaders VC Fund. And then recently in Australia, we saw some news that, you know, a Sydney-based health tech startup called Human recently raised $10.15 million to build the future of personalized healthcare. And that was co-founded by some ex-Canva people, women actually, Georgia Vidler and Kate Lambritis. And as we know, Canva is co-founded by Melanie Perkins, a quite well-known entrepreneur in Australia. So that 10.15 million seed round, you know, is claimed to be the largest of its kind ever raised by an all-female founding team. Backed by some high-profile investors like Air3 and Skip. These investors aren't the only ones. In Artesian, Ananya, you saw the opportunity. Artesian saw the opportunity, you know, in a listed context, because you have a women's economic empowerment fund. Sometimes we forget there's also listed opportunities, but going to the fund level, you know, you're seeing an opportunity in gender lens investing. Can you talk a bit about the process behind Artesian Ventures launching the Female Leaders VC Fund with Scale? And, you know, this is the first explicitly gender lens venture fund in APAC. Why are you doing that now?
Yeah, I mean, I think now because we see gender lens investing as a financial arbitrage, and it's probably extending on exactly what everyone else has been saying. But while, yes, this is an impact lens, you know, we're still working as investors, like we're institutional investors actually at heart. So we're looking for returns. And I mean, like Samar said, female founders outperform. And based on like a lot of research, just like underserved markets, like for example, like female health, they're not actually niche. And so we've recognized that, you know, actually looking at the other side, like in terms of supporting fund managers who also identify as women, is just as important to like just make sure that flywheel effect is going. Like I think for us, you know, looking for, like Samar said, unexplored markets, an underinvested pool of talent, like we sort of have a tagline and we talk about how talent is evenly distributed, but it's actually the opportunity that isn't. And that's what we're looking for. Like when we think about gender lens investing, like I feel like sometimes it's very high level, but for us, when we look at gender lens investing, it is actually basically a process, right? And like we're doing something as an extra data point because we truly believe that it is actually a strategic return for us. And so that's why we're going after it, like as well as the impact side, of course, which is, you know, everyone here probably agrees with, but that is what we're looking for in terms of a commercial sense as well. So, you know, we basically consider like it a market failure that we haven't been able to invest in female founders. And we're looking at that as an opportunity for us. And it's kind of almost hiding in plain sight.
And Ananya, you say that talent is ubiquitous, but opportunities are not necessarily so. How are you finding deal flow? How's your deal flow going?
Yeah, I get this question at least a few times a week. So it's really interesting because I think it's a visibility issue that a lot of people think that we maybe don't get deal flow. It's hard to find deal flow. Like, is it like quality as well? And that's fair. Like, there are questions that I think it's a visibility issue instead of a supply issue. Like, I think there are a lot of stats that actually show in the last 2 years there's been like an increase in female founders actually. And it's similar to, I guess, when I explain it to people, when you're looking, for example, like a female candidate, it's the same thing, that you have to do the work to attract the right type of founders, to make sure that you're visible to them, that you're attractive to them. And, you know, so while we're privileged that we do get a lot of inbounds, we also do a lot of work in outbound as well. And that's important to be able to recognize that. Like, even for example, we've had to think about our own processes in terms of, sometimes I have founders who identify as being a woman, and they might actually, you know, be a bit more conservative than maybe someone else in their modeling. And that's something that as investors, we actually have to recognize. And those sorts of things just perpetuate in everything. And it is like we have a process, but also there are things that we're learning as we figure out through the patterns as well. And it's interesting because I don't think that there are a lot of examples like that.
And so you talk a bit about your process. Can you give us an overview of the process for screening your investments, and what's your core investment thesis driving, you know, the investment in women?
Yeah, so I'd say the core thesis is making sure that the women actually have decision-making power in the startup itself. So we have something called a gender diversity assessment score, and that's, we call it GDAX for short. And we basically look at a few different layers. So we look at the founding equity that's between founders. So an example I like to give to people is sometimes we'll have founders who maybe we've had the founder be we used a lot in the branding or whatever, but they maybe only own 5% of the founding equity, and the male founder might own like 50 or something, and that doesn't meet our mandate. So the equity that they hold is like weighted the greatest, because, you know, that actually means that they have more say in what's going on in the company. We then look at how many women are on their exec team. So like similar in the sense that we're looking at leadership, like diversity. We also look at how many women are on their board, and also whether they'd be willing to have transparent gender policies and make that public. And that's something that our team works with them with, because, you know, we understand that startups, it might not be the first thing that they do, but like I think Samar, we've talked about this before, that it's important to set that tone at the beginning, because it's really hard to reverse if you don't start, you know, when you don't think about these things from the start. So that's something that we want to make sure that our founders are looking at. But like I said, like, it's a data point for us. It doesn't mean that we'll invest just because they meet our criteria as well. It's an extra point in our due diligence, because we truly believe that this will help with our own strategic returns, as well as it being an impact case. So I think that's important to note, that this is how you practically look at it. And again, like, you know, sometimes not everyone meets these things, like, you know, this criteria too. Like, I've met founders who have been looking for board members who are women for a really long time. And you kind of have to consider that case by case as well. Like, you know, like, are they impacting women, and is that going to maybe increase their chances? So like, yes, it just helps us frame it, but, you know, there's always like cases outside of it as well.
I think that's really useful for some of our audience to understand some of the practical questions that they can, you know, incorporate into their DD processes, and when they're doing this, you know, qualitative analysis of their you know, potential investees. I might ask you, Dr. Pamela, how's your deal flow going? You're seeing a range of companies all around the world. What's that look like for you?
We're more interested in investing in the venture capital funds, who then invest in the portfolio companies. We do shadow investing in companies that are part of the portfolios of the various venture capital firms. So we'll invest if they meet certain criteria, very similar to what Ananya talked about. We start with the fundamental premise that if there are women on the top management team or board of directors and in other decision-making roles, then those companies and those organisations will perform better with less money. There will be better, more effective cultural practices in the workplace. People who work for those companies will be more satisfied. There'll be less fraud, less scandal, better policies for human resource management, better retention rates. So we start with that as our fundamental premise, and then find that the deal flow, for example, I'll give you True Wealth Ventures, a local Austin venture capital fund started by two extraordinary women, Dr. Sarah Brand and Kerry Rupp. And they now, they deliberately did smaller funds. So they now have, I think, about $60 million under management. They just closed another fund. And they look at like 2,000 deals a year. And so I think in Australian gender lens venture capital investing is probably a little ways behind the US. And what I'm hearing from the venture capitalists here in gender lens investing is that the deal flow is really strong and the quality is really high. And it's more of an issue of getting the funding into the venture funds. So one of the, another female venture capitalist, Sharon Bosmick, who is with Astia. Astia is a very well-known angel investor and accelerator out of Silicon Valley here. And they started a venture fund a couple of years ago. We were part of their first round of investing in that. And Sharon, I saw her a couple of months ago in New York, and she said she was trying to get money from institutional investors. And she said, don't put me in the women's bucket, put me in the performance bucket, because women far outperform men in all those aspects that we've talked about. So the same thing goes for deal flow. If the quality and the quantity is in a more mature industry, and Australia will grow that pretty quickly once you get a critical mass. And seeing both Ananya and Samar here and talking to Tanya last week and UCAT, I have extreme hope for Australia and Australian women and Australian women entrepreneurs and investors, that you guys are the face of this growth in this industry. And I'm really excited to see it and to see what you're doing.
I really love that reframe. It's moving into the performance bucket. And I think we're actually seeing, I'm seeing a full court press, because not, you know, Pamela, you're investing in funds and Artesian's investing in founders, and you know, so Scale is creating a network of founders and investing in founders as well. But I'm also seeing lots of listed opportunities. There's obviously the Artesian Women's Empowerment Fund, and there's also the Global Impact Initiative, which is investing in listed companies around the world that has predominantly women on boards or in their management team, and they're doing some really cool things with impact investing, and you know, how they've structured their unit classes to enable capital to flow then into, for example, funding women and girls projects. You know, income can go into those charitable projects, and an election for the capital flows to go back to the investor, or both income and capital flows to go back to the investor, or only capital flows and income going to those charitable opportunities. So we're seeing a lot of creativity in this space with investing in women-led ventures. Samar, you know, how many women are you seeing a year? And and where are they?
Oh, we see hundreds. Like, I mean, there's only, how many of us are there? 2.5, like FTE, not even. And we see, oh, I don't know, we're sending so many to Ananya as well. Like, we literally cannot keep up. And that's why we kind of got the education as well, to sort of funnel some of them through that process and sort of manage the flow so we don't miss any. And equally, like Ananya mentioned before, like doing outbound and sort of, you might meet a founder 3 years ago who has a brilliant idea, who's perhaps consulting or doing more of a consulting approach. A lot of women typically do that, especially when they have children. They go out and, consult their expertise and they're doing brilliantly, but it's not a scalable model. It's not usually typically an investable model. And then they'll create this incredible investable opportunity. So yeah, we see hundreds, we've seen thousands over the years, and we're just continuing to grow that pool. We speak to probably, hundreds one-on-one, and then we're trying to get to the thousands, the more and more women we can get involved, and like collaborating with universities as well. Like the earlier girls and women, and I think that's what we're starting to see as well, Kat, is the next generation of invest. I spoke to an incredible founder just before this call, second-time founder out of New Zealand. Actually, she's in Australia now. Ananya, I need to introduce her to you, but like incredible. And they think about the impact that they're having on the next generation, and that, flywheel effect of founders becoming funders on their next journey, and then becoming second-time founders is, the Canva example you gave before is really like, thanks, Pamela. I agree. I think we're on the cusp of something super exciting, and we are 100% in the performance bucket. Like I said before, I chose to come into this space because we want to make money. Like, we're not just here to do good things. Like, women are incredible and they're doing incredible things, and we just need to support them all and give them. I think the only stat I really don't like is that they perform more efficiently with less capital. And I hate that stat, because imagine if you gave them the exact same amount of capital, what they could actually achieve with that.
Absolutely. And, we see women performing efficiently with less capital in households where they've been managing the household budget for however long. And then that is very much translatable into, their commercial interests. And I really do celebrate the just amazing young women that are doing quite creative, innovative things. I mean, we talked a little bit about Maddie Bergen earlier, and what I find really fascinating about her, she's 20 years old, and she was a VC analyst and found that there was, through her deal flow, there was like very, very few female founders getting funded, or very, very few females through that deal flow, because of the investment thesis of that particular firm. And so she decided in the Web3 space, blockchain-based industries, to launch an NFT collection called Angel Alliance that was designed to fund female ventures, both in Web3 and in the traditional space. And when we minted that project in March, we were able to invest in 8 entrepreneurs in Ghana and in Southeast Asia through the Hunger Project, interestingly enough. And that has transitioned into being an investment now in the Web3 space. And what they're actually doing is also building some capacity for women to be able to analyze Web3 projects. So they've created an investment analyst program as well. And again, there's that theme of the full court press, with women creating innovations to tap into these, what are missed opportunities for others. So we only have a few minutes, but what advice do you have for some first-time gender lens investors? How can they capitalize on opportunities in this space? Ananya, I'll start with you.
Yeah, I mean, Samar touched on it before, but I think the first thing is, there are people who've done it before. There are people who want to help. So collaboration is like probably the first step always. Like, there's always someone smarter than you who can actually help you out. Like, for example, I go to Scale all the time. They introduce me to so many companies, and it's really interesting because you can find ways to benefit like both organizations. Like, for example, that I come across most of the time, the reason that I do actually have to pass on founders is that they're too early. So I'll send them to Scale because they'll help like gear them up for the next stage. And I think that's something that it's important, especially in like all VC, but I like seeing companies that are too early because you can see them like progress throughout time. So I think the first thing I'd say is like find others who are in the space and like get their help. The second is this was like in a Harvard article I read like a year ago, and I talk about like the ABCDs of sponsoring like underrepresented groups a lot. But like if you're not in a position where you're actually the decision maker at like a VC firm, or you can't actually provide money, there's so many things that you can do like on top of that. So like A is amplifying. So that's, talking about like people, even if they're not in the room, like for example, Samar just talked about, Priyanka and the Creative Cooperative. And, now there's so many more people who've like now heard of them and can go look them up. The second thing is like, boosting or referring people. So like actually introducing them and, for better or worse, the way that, VCs work a lot of the time is that they rely on warm introductions. So if you're in a position that you can do that, like definitely try and help people in terms in that way. I think, yeah, connecting similar, like if you can invite people to events, starting to like get them, like that's like a great way to be a good gender lens investor as well. And the D is defending. So like if someone's not in the room and like, obviously, like you're not always in the position where you can, I guess, call someone out. But for example, sometimes, I've heard investors call a lot of women like not coachable, and you kind of have to like understand that, hey, like, are they actually not coachable, or do you just maybe not understand, how someone is working or like their type of style? And that's honestly, it comes with time, but getting opinions from other people in terms of how to actually deal with that situation is important, I think. So that would be my advice, is that sometimes you might not actually be in the position to invest, but there are other ways to do it.
That's some really practical, great advice, Ananya. And we've got about 1 or 2 minutes left of this discussion. Dr. Pamela, if we're closing out, what are some of the opportunities, or how can some people on this panel audience capitalize on opportunities in the gender lens investing space?
I would start with doing what we do very regularly with our entire portfolio, is a health check on your current portfolio, whether you invest at $5 at the local bank or $5 million in a venture capital fund. I ask the question, are you investing in ways that do more harm, or do you want to invest in ways that help mitigate the climate crisis, the impacts on humans around the world, and make money while you're doing it, and growing the number of organisations who are better cultures, better policies for their employees. So I would say everyone is an investor if you expand the way you think about investment and you expand the way you think about success. And so start by putting your money where your mouth is. Find a bank that is a B Corp. Invest in a local nonprofit, or invest your time in those kinds of things that especially where there are women at the helm and in decision-making roles, because those organisations will bring far more benefits, not just to you as an investor, but also to the wider society.
Thank you, Dr. Pamela. Very wise words indeed. And finally, Samar.
I think this is super grassroots, but I think a lot of people on this call might have conversations with a lot of women entrepreneurs, or women thinking about entrepreneurship, or even younger girls who are in high school, because that's really when the conversations start. And I think a really practical thing you can do is sort of pay it forward. So if you're having a conversation with your partner's husband, or your husband's kid's friend, ask if they've got a friend that is disadvantaged, that is a woman of color, that may be on a scholarship at the school, and give them half an hour of your time as well. I think I've taken this from one of the venture firms in the US, but I think it's a really great, super easy way and practical way to get a bit more grassroots and pay it forward to more disadvantaged women.
Thank you so much to our panelists. And we do have one question from the audience, which came from Josh Fenton. And I wonder who can maybe answer this. Is there much happening in Tassie for women-led startups?
I was about to respond, actually. So I don't know of anything specific, but at scale, all of our programs are online. And so we've got a national approach, and we can connect you in to people in Tassie. So feel free to reach out.
Thank you so much. Thank you, Samar, Ananya, Pamela. Heidi, I'm going to hand over back to you.
Awesome. Thanks so much, Kat. And thanks everyone, all of our speakers, obviously, and all of our attendees today. It's really means a lot that you came along, and I really hope you got a lot out of it, because one of the things that we're really keen to do at Ecotone is to help the investment community understand how powerful their decision making is as investors, and how you can drive social and environmental change that you want to see in the world by your choices. So I hope there's lots of food for thought out of this discussion. And I just want one final thank you to DFAT for being a partner on this project. So after this, I will just send around an email with some information about the upcoming next webinars, as well as the top 5 resources that our team thinks will be really useful for you all to read if you want to delve more into the research. So thank you, everyone. Have a great week. See ya.
Bye.
Thank you.